Josh, can you do a video on a withdrawal strategy when your medical costs exceed your income? We'll do this for a separate video on it itself because a lot going on here. Sad. Sandy writes in back in a whole new world, the old world of February 14th, just 3 short months ago, and it seems like a world ago. Sad. She goes, love your channel, been binge watching it. It's better than Netflix. Thanks, Sandy. Hopefully you still think that, but a lot of things have changed in the last couple months, but be it as it may. I'd love for you to do a video on a withdrawal strategy when your medical costs exceed your income. We did pretty well saving for retirement, but husband fell ill. The prognosis is not good, and lifespan may be just 5 to 10 years, man. Praying for him. Praying for him, Sandy. And praying for you. Praying for you as well. I'm sorry to hear that. We're going to use that retirement nest egg to pay for long-term care. We also have a cash reserve, some taxable income, but the unreimbursed long-term care exceeds the taxable income by about $50,000 a year. In 5 years, it'll exceed income by $100,000 a year. We have $500,000 in a 401k and $500,000 in a brokerage account. Our financial planner says that we should use the cash reserves first, then cash out the brokerage account, and then save the 401k for last, and the guy's just wrong. I think we should start cashing out the 401k first to offset the negative taxable income. Sandy, you're hitting 100%. Your financial planner, I don't know what he's thinking. He's incredibly wrong there for sure. Start pulling out the 401k without question. If your husband doesn't make it for a couple of years, then you're going to be with a big 401k potentially with just a single taxpayer, and that doesn't do any good when he's still alive. And there's no good answer here. I think if you got negative income, though, not only won't even be taxable. I think you're hitting on the head. That's what you said right there. I know if you have negative income, it won't be taxable for sure. So now start pulling from the 401k first. I don't know what your financial planners think about it. This doesn't make any sense at all. So you are hitting on the head. That guy is wrong. Make sure you get your wills. Make sure you have a durable power of attorney, please. Because if you have that much money in a 401k, well, presumably some of it's your husband's, which means you have no access to it, no rights to it, unless you have a durable power of attorney, which survives incapacity. And if your husband's fallen ill and his life expectancy isn't much more than 5 to 10 years, I imagine incapacity is a big issue that you have to contend with. So make sure you have a durable power of attorney. Obviously, you want to make sure you have all your stuff titled correctly, so it doesn't have to go through probate, it just goes directly to you. Get a living will. Again, it's just a right to die clause. Make sure you know, and I don't know if you have kids or not, but just make sure everybody is on board with what to expect, because this sucks, man. There's no other way around that, but it could suck a whole lot worse if you're not careful. So blessings to you, Sandy, and your husband. Big hugs to him. If you have children, big hugs to them. I can't imagine what you're going through, but your line of thinking is correct. Your financial planners is wrong. And if you're paying that guy money to give you this bad advice, save the fees. It's not doing you any good. Hope this helps. Good luck.